Dear friends, we are in MCOM third semester corporate tax management subject. So this is the first class, and in any first class what we have to do? We have to learn the syllabus first of all. We have to go through the syllabus. So this is your syllabus. As always, as usual, just your subjects are divided into 5 units, all your subjects. So in the first unit, we will come to know about the introduction of corporate tax management. What is the significance of corporate taxation, and what are the concepts and definition of corporate income tax? Who is SSC? What do you mean by SSC in default? Previous year, assessment year, residential status of company, incidence of tax, types of companies for tax purpose, incomes forming part of total income of a company, exempted incomes, and tax-free incomes with specific or with special reference to corporate SSC. This first unit is totally theory only. There are no problems in first unit. Okay. So coming to second unit, it pertains to corporate taxation. Okay. Next, third unit, tax planning with reference to financial management decisions regarding, you can see, regarding dividend policy, regarding bonus shares, capital structure. These are various financial management decisions that have to be taken. So your third unit refers to tax planning with a specific reference to various financial management or financial management decisions. Coming to fourth unit, it refers to tax planning based on business restructuring and managerial decisions. See, sometimes you may have to restructure your business organization. You may have to join with other company, that is amalgamation. You have to merge with another company, or sometimes you have to go for a demerger, that is demerger. You can see. Okay, so so all these things you are going to learn how to decide on various matters with reference to tax planning in mind. Okay, similarly, sometimes you may have to decide on buying a property or taking it on a lease. Okay, you may have to make or buy, you may have to take decision on whether to make a product or buy a product. You have to take decisions with reference to repairing, replacement, renewal, renovation, like that. So all these decisions, how you are going to take with a special reference to tax planning in mind, that topics will be discussed in unit 4. Coming to the last unit, that is unit 5, special tax provisions for certain undertakings. See, there are various undertakings with a special focus based on establishment in special economic zones, that is SEZ. In newspapers, in TV news, you will come across this word SEZ. So sometimes you will come across this word SEZ, special economic zone. So what are the various tax provisions for them? 100% export oriented units are there, undertakings are there, and certain undertakings are engaged in infrastructure facilities, telecommunication, power sector, industrial parks. So all these things we will learn in the 5th unit. So this is your syllabus. Without wasting much time, as I mentioned, I will start with first unit, that is introduction to corporate tax management. This is first unit. As you all know, in your degree, that is at your BCOM stage, at your UG level, undergraduate level, you must have known that taxes, well, the concept of tax is very clear to you. What is tax? In simple terms, tax is compulsory payment to government. It may be central government, it may be state government, it may be a local government, that is a municipality or a gram panchayati, or any other local body, local organization, local governmental organization. This is a compulsory payment. You cannot escape from it. Okay, a tax in simple terms is a compulsory payment made to a government organization, to a government body. Okay, so as you all know, as I have already mentioned, at your degree level, at your UG level, you must have learned that taxes are of two types: direct taxes and indirect taxes, or otherwise direct taxes, indirect taxes. Okay, direct taxes, as you all know, they are paid directly to the government without any brokers, without any mediators. Whereas indirect taxes, let us take for example, this 2-3 years ago, our government has brought GST, goods and services tax. This is an indirect tax. On behalf of the customer, on behalf of the taxpayer, a middleman will pay to the government. So that is a form of indirect tax, GST. So direct taxes, in direct taxes, there will not be any broker, any mediator. Directly a person, directly a taxpayer will pay tax to the government. So in direct taxes, we will come to know about income tax. So at your degree level, you have learned how to calculate personal income tax. Means an individual taxpayer, there will be 5 heads of income. That is income from salary, income from house property, business income, income from other sources, income from capital gains. These are the 5 heads of income. So how to calculate personal income tax? I hope you all know. You have all calculated at your degree level, at your UG level, that is level. Okay. So how to calculate, what are the various deductions, that is under section 80, from 80C to 80U, various deductions you will find. So those calculations, those deductions, those exemptions, various exemptions are there. Let us take for example, agricultural income is there, that is an exempt income. All those calculations, all those things you have done at your UG level. Now at your PG level, in MCOM, you will come to know about corporate taxation. So before this word, you carefully observe corporate tax. So this is an amalgam of 2 words. It's a combination of 2 words. One is corporate and the other one is tax. So what do you mean by corporate? In simple terms, corporate means a company. We are familiar with the word company than this corporate. Corporate means we think something else, but corporate is equal.
Hello.
Okay. So corporate tax in simple terms is the income tax paid by a company. Company is also an assessee at your degree level, at your undergraduate level. You have learnt this term assessee. Okay, assessee means he or she may be an individual, maybe Hindu undivided family, maybe a company, maybe a cooperative society, maybe a partnership organization. Any of these will be termed as assessee. Assessee is a person who is liable to pay tax to the government, and for whom some amount may be refundable from the tax authorities. That is what you mean by saying assessee. Assessee means who has to pay tax to the government, to the income tax authority, or to whom certain refund may be ready to come from the tax authorities. He may be liable to receive refund for the taxes he has paid at an earlier point of time. Similarly, whenever an individual or a body corporate, that is a company, or cooperative society, or into undivided family, whatever the case may be, if they have to pay penalty, if they have to pay any This additional tax, they are also deemed to be known as assessee. So assessee means a person who has to pay tax. An individual. Here individual means not only a live person but a company, but a Hindu undivided family. All these together are known as assessee. Please remember. So corporate means here a company who happens to be assessee, who has to pay tax to the government, to the income tax authorities. Tax, corporate is a company. Tax, as I mentioned, is a compulsory to a government authority established by government. It may be central government, it may be state government, or it may be local government. So that is what we mean by saying this. Now coming to significance of corporate taxation. Significance means what is the importance of taxation, corporate taxation. See, not only in corporate taxation, but ordinarily also taxation is very, very important. Tax is the source of income to the government for carrying out economic development. Various 5-year plans or yearly plans, annual plans, or whatever the nomenclature, whatever the name that you give to carry out economic development in the country, in the state, in a particular area, governments require money. So that money will come from taxation. That money will come from the tax payers' income. So with the help of corporate taxation or with the help of taxation, the government will try to achieve the objective of full employment. Means government will establish various organizations, various companies, will carry out various operations across the country, across the state, to see to it that all the whoever is willing to obtain a job, to get a job, they get employment suitable to their qualification, suitable to their technical ability. And with the help of taxation, the government will try to stabilize the prices. Means prices, how prices are determined, you know, it is an intersecting point of demand and supply. The demand curve, you know, it flows slopes from left to right, whereas supply curve slopes from right to left. Here this is equilibrium price. This is a state of equilibrium. So if demand is more whereas supply is less, prices will increase. So in order to control, in order to bring the prices to an optimum level, we have to produce more. Production is possible more when we establish more organizations. If private persons are unable to establish, it is the responsibility of the government to establish companies, to establish organizations. So that is why, so the government will collect funds in the name of tax, and the government tries to establish various organizations to see to it that supply is increased, so that it meets demand at an optimum level, so that at a very less price only people get quality products. So in order to achieve this objective, taxation is required. In control of cyclical fluctuations, see, at your degree level you must have learnt about business cycles. In Telugu you will call as Vyapara Chakralu. These are business cycles. This is the highest point of growth, whereas this is the lowest point of growth. Okay. So in order to control these cyclical fluctuations, government needs funding, and that funding is possible with the help of taxation. Reduction of BOP difficulties. What do you mean by BOP? BOP means balance of payments. Balance of payments. BOP means. Balance of payments means, see, you all know, a country cannot produce everything that it wants on its own. So it has to depend on foreign countries. So that is why a country will import certain goods from foreign countries and will export certain goods to other countries. And during this import and export, there will be a problem of balance of payments. Means if exports are more, then imports are less, then there is no problem, there is no difficulty. But when imports are more, exports are less, then there is a problem for the government. And in order to reduce the difficulties of balance of payments, the government goes for corporate taxation. With the help of corporate taxation, BOP difficulties, balance of payments difficulties can be erased. Then non-revenue objective. There are various, see these are all more or less revenue objectives. Means with they are more or less related to financial objectives. But apart from that, there are several non-revenue objectives. Means like the government requires money to protect the country, to protect from outsiders, to protect from internal idiots also. That is the government requires money for policing, police department, and for military department. Money is required to protect the country from outsiders as well as insiders. So for that, the government goes for taxation. So these are general objectives of these are the general significant points with reference to taxation. Now coming to specifically the importance of corporate taxation. Corporate taxation is more important because in a company, large scale operations take place. The company involves in large scale production, large scale selling, large scale purchasing, large scale employment opportunities will be there in a corporate body, in a company. So if a company loses heavily, so much loss to so many persons who are sometimes thousands, sometimes lakhs will be working in a big company, in a multinational company. So several people will go to the streets. They will have to beg on the streets if they lose employment. So if the government sees to it that exact records are maintained as to how much income is there, how much expenditure is there, how much tax they have to pay. So government can control body corporates, companies. So with the help of corporate taxation. Because of this, they have to maintain exact records. Accurate records they have to maintain. They will be forced to maintain. So in that case, the organizations then can control to some extent the losses. Okay. Then more or less in some cases, you take at your degree level, you have studied about different types of companies: public company, private company, local company, foreign company, national company, domestic company, like that several companies we have seen. So in case of government company, public resources will be there. In the case of public company, public resources will be there. The company will collect money in the form of shares, debentures, and a company procures money from various financial institutions. Those financial institutions can be banks or otherwise other financial institutions. So money they will take and they will invest. So if anything happens to a company, so much of loss to the society is going to be there. So in order to see to it that public resources are intact, they are used in a proper way, corporate taxation helps. And in some cases, in our syllabus we have seen in the 5th unit or 4th unit, the government will encourage the companies which operate in special economic zones, in backward areas, 100% export oriented undertakings, organizations which are engaged in telecommunication, which are engaged in production of electricity, power generation. So these in northeastern area of our country, northeastern states of our country, if companies are established, the government will help them. Government will support them by providing tax-free facilities up to certain periods of time. So all these increase the significance of corporate taxation. And for a company, They will earn, companies will earn thousands of crores of rupees in some cases. If it is a big multinational company, they will earn crores of, thousands of crores of rupees per annum. So for all these reasons, there is very much importance attached to corporate taxation. So dear students, today we came to know about the syllabus of corporate taxation, which is in MCOM third semester, and we came to know that 5 units exist in corporate tax management, and the first unit introduction is completed. You came to know about direct taxes, indirect taxes, and what is corporate tax I mentioned. So corporate tax is the tax paid on income, that is operative income, specifically operative income paid by company to income tax authorities. Okay, so the significance of corporate taxation also we came to know. So tomorrow we will come to know about remaining things. See, I started with you can see I started with introduction. Significance of corporate taxation is over. Various other concepts, and the remaining part of this first unit we will come to know about it in tomorrow's lesson, in our next lesson. So thank you very much, dear friends. We will meet in our next class.